Bhasin, hi, good morning. Good to be speaking with you. First up, tell us about the market construct. You were a bit bearish on the markets a few weeks ago. Now, with the entire shakeout, do you think the poison is out of the system and should start deploying again?
Yeah, good morning, Anisha. You're correct. Around that fourth, fifth, we warned you. We kept telling you that take some money off the table. Everything is on the price, and markets are uncanny. The correction has been very fast and furious, but that's what bull market corrections are. I think this 21,800, 21,900 should be defended by tomorrow, day after. I think we should see a turn. The only caveat here is that election results is, I'm not a physiologist, so I cannot predict that. But that is what now all analysts are going to latch on to 60%, 65%. I think that is all humbug. What we have to get, we'll get on the 4th of June. And whether 320 or 350 or 300, we will get a majority. So I think that this is a good opportunity. Earnings have been fine. The Dow has been on a one-way spree, and that tells you that markets are now discounting more than two rate cuts over there. Bond yields are softening. Oil is low. Inflation is low. And in India, I think with the onset of monsoon, you will see much better time. So good time to start deploying what you had raised cash, which we advised you. I think by tomorrow or latest day after, we should be starting to head up.
Okay, Sanjiv, hi, morning. So tell us exactly where to deploy cash. What's your stock list for the week?
Good morning, Aisha. So I have been correct on Vedanta, which I've been promoting from all the way from 250. It hit a new high of 420. I think Vedanta is going to new highs despite the market doing nothing. Coal India is another of my top picks, which I've been reiterating to be bought. Select banks, which I think are now going to be in a very sweet spot, particularly AU Bank, and be little bit contrarian and buy HDFC Bank. Do a sip. You won't get these prices forever. And even though it's an underperformer, I think this is the most opportune time to get into that. On the other side, we think two stocks which we are very, very bullish as a disclosure, we have made our clients buy in good quantities, is Idea, which we are going to double, that is Vodafone Idea. And second is India Bull Real Estate, where on the 22nd, I think we'll get the final hearing on the merger with the embassy getting the merger stake. You've already seen promoters put in almost 4,000 crore. The deployment of the fund gives us very good opportunity in India Bull around this 115, 170. We think this is again a doubler over the next 1 year.
Okay, so a doubler in the making, Indiabulls real estate, and interesting how Vodafone Idea still remains a buy as per Mr. Bhasin, given the fact that stock has already run up from that 10 rupee closer to 15 rupee now, but he expects it to double. Mr. Bhasin, what's the view coming in on the auto majors? Tata Motors and Eicher both did not have any major shine to their numbers, but what's the expectation for way forward on these two?
So, Anisha, clearly you are seeing that the leaders are the capital good and the auto stocks hitting all-time highs. Can we justify buying that? If you own that, you're sitting on a very handsome profit. But I still think now the time has turned. You should take some money off those tables, particularly capex stocks and autos, and get into defensives like FMCG, IT, and PSUs. I think IT can be a very, very smart turnaround because one, you have the rupee as an alibi. Two, we think the spending pattern in the US is going to be a very strong rebound on IT spending. And thirdly, if you heard what TCS and all said, they've started to at least 30% of their book is now on AI. So they are very, very fast and nimble as far as change in times. And I think IT stocks are giving you a very good entry point. So IT, metals, and PSUs, and FMCG, which I think can be a dark horse, particularly stocks like Lever, Colgate, Godrej, and Marico.
Sanjiv, what is it that you're making of the entire, electric cables segment? Because after that huge correction which happened post those ED issues, most of these stocks have, recovered all of their lost ground. And clearly it's business back as usual. We just heard the same from Polycab.
Correct. I think that was a buying opportunity for whatever reason that fall came. And now you have, these specific launches of funds which are going into capex stock and so on. If I read HDFC and all, I still think Havells has been my top pick as far as consumer electrical goes. And I think that will continue to be one of the best performers. Summer season is on the anvil, and you're seeing the demand for ACs. There are no more coolers. It's all about ACs and the wealth effect of aspiration. And I think Polycab and Finolex Cable, these are two other stocks which are in our portfolio. So we continue to be bullish there. Also, Aisha, on autos, we would like to recommend yesterday and day before, Ashok Leyland has hit a new 52-week high, which has been one of our top picks from 130, 150, 170. We still advise clients. I think Tata Motor is fully priced, book profit there and get into Ashok Leyland. I wouldn't be surprised if 300 comes in Ashok Leyland by the end of the year.
Okay, 300 on Ashok Leyland by the end of the year. But Mr. Bhasin, what's the best recommendation within the pharma pack? It seems like Piramal Pharma has come out with a very strong set of numbers. Even Dr. Lal, for that matter, has seen a couple of upgrades post his earnings. CLSA as well as, I think Jeffries has actually upgraded that counter. What's the view on these two?
Correct. I think both the companies did well, and we are seeing that in the diagnostic space, select stocks do well. Piramal Pharma was a steal for us at 70 as a disclosure. We still have some of it in our portfolio, but now we think our dark horse play continues to be Lupin. Lupin, according to us, is headed back to those old highs of 2200, and any decline should be a buying opportunity. We have all these three in our portfolio, and we also think that diagnostic stocks will continue to be reasonable performers because of the sheer momentum of market cap which they have, and the space being limited to 3 or 4 large players, in which Dr. Lal will stand out.
The view coming in as far as a couple of these pharma names are concerned. But Naresh, what's the view on Bank of Baroda as well as Union Bank? Both will be reacting to earnings. While Bank of Baroda has seen a few upgrades come by, Union Bank was a bit soft. But on the charts, what would be your recommendations on PSU Bank?
So expecting some consolidation in the PSU banking names, but something like Bank of Baroda, which has corrected from 285 down to 250 odd levels. For the last 3-4 months, it has made bottoms around 245. So expecting 245 to hold closer to 250 is a buy with a stop loss below 245, and would be a slow recovery towards 275, 285. So expecting the recovery to be a little slower than the previous moves. Same way, Union Bank of India, 135 is roughly the support, and it's closer to 142. So a lot of these PSU banks have come back to supports, corrected 5-10% from the top. But for now, it looks like a consolidation and a slow recovery.
Okay. PSU banks are off from the highs. But these are State Bank of India numbers were quite decent, and the stock is not expensive. While the world is talking about being a contrarian buyer in HDFC Bank and Kotak Mahindra Bank, perhaps other private banks, do you think one should keep it simple rather than, two birds in a bush, one in hand is better? Which is that why preempt what will happen with HDFC Bank and Kotak? Let's buy SBI because you know that there is visibility, valuations are okay, and there is certainty.
Yes, I agree with you on the price. The State Bank, Canara Bank, PNB have been huge outperformers. But we were in that gear camp which was playing that. Now look, Nikoj, it also depends on your horizon in the near term and in the slightly longer term. Slightly longer term, you cannot have mortgage company like HDFC trade at such a big discount, given that their evening of NIMS is just on the card. Now, as the deposit franchise grows, we know the cost of money has been elevated. But on the other hand, you're re-rating everything to do with mortgage and construction. I think HDFC as a combined entity is very well positioned for the next maybe 1.5 years. Yes, in the near term, you're right. I think State Bank is headed to 1,000. I also think that the Bank Nifty now becomes a very good proxy. So rather than choose me or anybody else's stock, just buy the Bank Nifty, because you have 6 PSUs and you have 6 private banks, which I think all sum apart at 47,000 are giving you a very good re-entry. I had said 47,000 will hit 50, and it did it. I still think if we get the correct side of the numbers on the election, then 50,000 will easily be crossed on 3 counts. Good rainfall, good credit growth, and easing cost of liability franchise, which means Bank Nifty can be an outperformer in the slightly medium term.
Okay, Mr. Bhasin, on that note, we let you go. Appreciate you joining us this morning.
If you like this video, then like, share and subscribe to ET Now.